Amazon is scheduled to report first quarter earnings on Thursday, May 1st, after the market close. Amazon in the previous quarter reported $187.79 billion in revenue, beating estimates by $563.26 million. They reported earnings of $1.86 per share, beating estimates by 38 cents. For this quarter, they are expected to report revenue of $155.08 billion and earnings per share of $1.36 per share. Over the last 90 days, 8 analysts have raised estimates and 22 have lowered estimates. Amazon meets or beats analysts' one-year forward estimates 67% of the time. The options market is pricing an implied move of plus or minus 6.75%. Amazon price action has been in a downtrend since their last quarterly report in early February. We can see that Amazon is currently trading right at its 5-day. It's currently above the 20-day. The 50-day did cross below the 200-day moving average on April the 22nd. Regarding my trades recently, between February the 19th and February the 25th, I trimmed about 2/3 of my Amazon position at $217.27 as the price dropped to below my stop loss. I added those shares back from March 5th through the 17th at an average cost of $200.72. So despite this 33% pullback from peak to trough in Amazon, the shares are currently trading right at my average cost per share. Amazon is about 1.3% of my equity portfolio. I entered Amazon shares on May 31st, 2022 during the bear market and before the 20-to-1 stock split. Over that time, Amazon has returned 55.89% or 19.15% annualized. This is better than the S&P 500 with a 34.57% return or 11.85% annualized. With my Amazon trading activity, the holding has returned 21.6% or 43.8% annualized for my current holding period. If we look at the RSI, we can see that it has improved recently. It's sitting right at the midpoint at 50.91. For the PPO, we can also see that it has been improving. Recently, we did have a signal line crossover a few trading days ago. We're still in negative territory, but is improving slightly. When we look at the relative performance to SPX, it is underperforming the SPX at the moment, and the momentum is just about equal with the SPX. We do see pretty good accumulation over the last year or so, been pretty steady and increasing. As far as money flow, we've been positive for most of the past year. We did take a dip during the tariff announcements, but it has moved back into positive territory. When we look at the performance compared to the SPY, Amazon has underperformed the SPY by 5.54% over the last year. It's underperformed the consumer discretionary sector by 8.62%, and it's underperformed the broad line retailers industry group by 7.25%. This is the Amazon trend chart in a weekly view. We can see since about mid 2023 or so that the Amazon price has been above that of the longer term averages. The difference of the longer term averages is moving near zero and may cross to the downside. The midterm averages are negative, but they are improving, while the short-term averages have crossed to the upside, showing some short-term strength. Overall, I think that Amazon is going to struggle amid the continued tariff uncertainty and the building recession fears. I am also watching the price trends to determine if price action improves when we have resolution to those two key pieces of uncertainty. Some key metrics for Amazon from Seeking Alpha shows that the forward PE is 29.84 times for Amazon compared to the sector at 14.31. So it's priced at a premium to the sector. Looking at the expected EPS growth and revenue growth, Amazon sits at 37% for the EPS growth rate compared to the sector at 5.55. The expected revenue growth is 9.95 for Amazon compared to the sector at 3.04. And when we look at the profitability, Amazon is more profitable than the sector with a net margin of 9.29 compared to the sector at 4.45. Looking at Amazon using fast graphs, we can see that they currently are trading at a blended PE of 32.51 with an EPS yield of 3.08. Over this particular time frame, 13 years, 10 in the past, 3 in the future, they actually have pretty much a flat adjusted earnings growth rate. Fast Graphs calculates a fair value ratio at 15, but the market has always priced Amazon at a premium with a normal PE ratio of 106.59. When look at earnings, we can see that analysts are expecting 13% EPS growth in 2025, 20% in 2026, and 26% in 2027. What I expect, given the uncertainty of this year's, will probably continue to trade at this PE, which would basically get us to a price at around 203 at the end of the year from the yesterday's close at 187.39, which would be a total annualized return of 12.75%. I want to thank you for watching and hope the earnings preview was helpful. Talk to you again soon. Have a great day. Thank you and trade well.